looking like they want to reverse a little bit. We've hit a lot of targets. Let me see if I can find some of those just to show you. Yeah, see where the Russell Daily is now? That's the extended, the second target from this high to low swing. Okay, that's pretty extended. And again, we have a strong outstanding upside target still open. In other words, that 1272, you don't see a 786 in here. So that means that we're actually broken res saying we should get all the way up here. But that doesn't mean it's going to happen the day after tomorrow. Anytime you see one of these targets, you have to be prepared for the idea that there's going to be a pullback. Doesn't always happen, but it sure can. And what do you do then if you're holding something longer term? Tighten up the stop. Put the stop below a logical level where if it's broken, you want to be out of the trade. If you have deep pockets, it could be the closest symmetry on this chart. If you can monitor the trade or the chart, intraday, then use, I'm saying if you're holding for a long period of time, then go down to, the 45-minute chart and use that support. Because if the pattern shifts on the 45, you probably don't want to be in it anymore. It really, really depends on what your trading needs are, time frame wise. That's really the main issue. I'll show you another example from the other day. I thought I was going to put together a bunch of examples, but I don't really like to do that. I don't care for, hey, did he cherry pick that or what? Here's ES. I think this will show up. Yeah, this is an ES 3-minute chart. And here's an example. This level actually did not break, the 786 support, because for that to be considered broken, you need, on an ES short-term intraday, you need to get a 2-tick break. So what's really cool is that if you were long here, put your stop below the 786. Why? Because if the 786 breaks, you're heading for the downside target. So if you don't want to, head to that downside target because you're a long, you use the 786 for stop placement. That's something, that I think is very, very valuable. I think I have another one of these too. Yeah, this one's even a little more clear. This is from a couple of days ago. See that? If you're wondering, if you have your own methods to get out of a trade, that's great. But if you're wondering where to place your stop, this is something I learned from Robert Miner, actually, not the 786, but the concept was that your stop should be placed at a level where, if broken, invalidates the reason to be in the trade. So if the 786 breaks and it puts you heading in the other direction, well, the 786 break is invalidating then the reason to be in the trade. That's the whole concept, and that works on any time frame, as long as you can afford that time frame. The problem with stop placement that a lot of people get into is they go, well, I have $1,000, and I have $10,000, and I want to get to the target, but I don't know where to put the stop. Oh, homina, 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 to quote Jackie Gleason, I lost $200. It's going too fast for me in the wrong direction. Well, that doesn't really make any sense. You want your stop in the place where, if it's broken, you shouldn't be in the trade anymore, because it invalidates the reason to be in the trade. So you have to do your money management work and figure out if that means you can afford that trade, if you need to reduce your size, whatever you need to do to be able to put your stop in a logical place. Right? That's a very, very powerful concept because, first of all, most people who I've met in this business don't do their money management work. They don't really know where, how much they can afford to trade and where their stops should be, and so on. And that's, a recipe for failure. Let's see what we have building up here with questions. I don't really see anything new. Okay, well, let's keep going. Still have a little bit more time. Okay, what have I not shown? Yeah, here, by the way, is the ES 45 minute. It's a good thing to look at because you'll notice in this case, the 45-minute swing is approaching, if it continues to rally, the 1618 target. And what that is saying is that the swing is extended. All right, again, you need to watch for the idea of a pullback. We've hit all the initial upside targets. So we're really susceptible to the idea of a pullback. Here's the NAS daily NQ. Again, we just hit the 1618 target of a rather large swing. Now, of course it can blow through, but what it's saying is it doesn't owe us anything more to upside. We have to be very careful with the NAS particularly. Definitely susceptible to a pullback. Okay, I see someone asked, yes, the GLD and gold timing work is going to be similar. Sometimes I use an ETF because once you have a futures contract where it keeps rolling, you're not dealing with the same data points, so it just makes it a little bit easier to use something where you didn't have to roll. That's even more so with the price work. In other words, if you try to take a continuous, I don't use continuous charts unless I'm trying to plot something on a weekly futures contract, which I don't do that much anymore, because what'll happen is you're taking the high from like 2 contracts ago and the low from the current contract. It doesn't match. You're not going to get a level that really makes any sense in relation to the current swings. Yeah, I'm not that wild about the 88.6 level. And really, that's, someone asked about 88.6 with euro. I find that the 88.6 only holds temporarily. So I'm just not that wild about trying to, track things down with the 88.6. If it works for you, that's great. I'm not just talking about the 786 in general. I'm talking about a methodology that I've come up with for employing the 786. So, if you might have come up with a way to look at the 88.6, but I found that it didn't really hold that much. Probably what I'd be doing in a case like that is looking at it on a shorter time frame, too. In other words, I might have a 786 on a different time frame. I found that if I added too many levels, too, I would end up getting like, oh, wow, it's a level all over the place. CCI parameters, anything intraday, 50, 14, and 6. The only difference on daily and higher is instead of a 14, we use a 20. The moving average is a 34 EMA, 34 exponential moving average. And, it's a good idea probably if you have CCI questions and 34 EMA questions, go to my website and take a look at the symmetry and triggers video, because it's going to go over each one of the triggers and there are 4 CCI triggers that I use, and there are examples there, and that'll really help. Can Fib be used with Renko bars? Yeah, I don't see a problem with that. Okay. When is the